Welcome back to An Orange Future. In these next videos, I want to highlight some of the pros and cons of investing in both asset classes of Bitcoin and real estate, or property as we refer to it in the UK. For the record, I must point out that I am an investor in both, and I'm a strong advocate of diversification. For many years, after reading books such as Rich Dad, Poor Dad, it became blatantly obvious that to build and retain wealth, you need to acquire assets. I've been on a personal journey to build generational wealth and financial independence, and so set about learning the best way or ways to achieve this. There are many factors that come into play here, such as your risk tolerance, your age, your current disposable income, and also savings available. It is beyond questionable doubt that real estate, if done correctly and timed well, is a trusted and proven blueprint in generating wealth and monthly income. There are many ways to monetize property. In fact, there are multiple property training companies which turn over tens of millions of pounds each year, just teaching all the different strategies through courses with mentors and coaches. Building a portfolio of properties will definitely increase your asset wealth and potential for future capital growth and monthly cash flow. This is where many of the gurus will entice you with their training courses, with the lure of leaving your 9-to-5 job to replace your income and achieve financial freedom. What they quite often fail to tell you is that as you increase your portfolio, you also create a large list of maintenance issues, which with 1 or 2 properties you barely even notice. But as you approach, say, 8, 12 or 20 properties, you will start to realise there is always a job on your to-do list, especially if you self-manage. It can start to feel like you've replaced one job with another. Increasing your portfolio will no doubt mean increasing your leverage. In recent years, with historically low interest rates, has made renting and refinancing very lucrative for landlords. Fast forward to today though, it is thought that we may be a very long way from returning to the ultra low interest rates we enjoyed previously. Although the probability is quite high that the interest rates that have been put in place as a very blunt tool to tackle inflation are unsustainable without causing significant damage to the economy. This, combined with forthcoming presidential elections in the US and the general election here in the UK, there is a high probability interest rates will start to come down in the near future and we'll start to see some rate cuts. The lending institutions have also stiffened their lending criteria and increased what they call their stress tests, which means in some areas there is not enough positive cash flow to attract new landlords or investors, or existing landlords to increase their portfolios until we start to see rates starting to fall. Some of the cons I wanted to list, which sometimes get overlooked but are very, very important. In the maintenance is a broad area which sort of comes with the territory when owning any sort of property real estate. But as a landlord, some of these items, it is imperative that they are not only done on time, but also certificates and agreements must be forwarded to tenants, otherwise it can be detrimental to your successful outcome in circumstances like evicting a non-paying tenant if they are not provided. These include things like gas safety certificates, these tend to be done annually, EICR, electrical installation condition reports, these are 5 yearly, EPC, energy performance certificates, these tend to be 10 years, and of course the TDS, which is the tenant deposit scheme. These have to be filed with an independent company. All these are very important areas which can't be overlooked and forgotten. If you like these short videos, then I would kindly ask you to hit the like button. It would help me grow the channel and it would be greatly appreciated. I will finish this in another short video.